Ladies and gentlemen, welcome back to another episode of the Breaking Bitcoin Market Update, your daily source for all traders wishing to improve their knowledge and skill in the cryptocurrency markets. My name is Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. Hopefully you guys are having a fantastic day. In today's show, we're going to talk about the potential bounce opportunities for both the blue chips, Bitcoin and Ethereum. Take a look at the broader market as well. Talk about the lack of the layer one narrative as we move into the Ethereum merge. And we're going to talk about how best to preserve capital in the bear market as we move forward. So let's get right into the charts and look at some potential opportunities in crypto today. Okay, of course, starting out with the Bitcoin Bitstamp weekly chart, as we are wont to do here. Obviously, we had talked about this in the previous updates last week, but if we pay attention here, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 red candles in a row. And as you guys will recall, TD Sequential is one of the, it's our most popular video here on the channel, and certainly one of the most popular trading strategies, I think, among retail traders in the cryptocurrency space, popularized by Tone Vays and others, of course, originally conceived by Tom DeMark. Fantastic trader, fantastic resources if you guys would like to expand your knowledge further on TD aspects. But the TD countdown, or excuse me, the TD sequential system says, in summary, that after 9 sequential movements in a row, you typically will get an opportunity for a reversal or a move back to the upside. Now, that's not the only factor that is affecting why Bitcoin is likely to give a bit of a bear rally here, a bit of a relief bounce. Dead cat bounce, if you like. There are multiple other factors. And if we just look at the technicals, of course, we can see that Minx, our primary oscillator here, our primary momentum oscillator, is deeply oversold. We will note that the last time on the weekly time frame we have touched those levels, we did see bounces, of course, back in the summer of 2021. And again here, just previously, earlier this year. So this would have been in January of 2022, and we did get that small relief bounce up here. Now we've had our second significant breakdown. Here's the first significant breakdown of this bear market. Here's the second significant breakdown. And of course, I would be remiss if I did not point out something that is so obvious. I shouldn't have to point it out, but I will point it out. Of course, look at this level of support that we established on the run back up in January 2021 when we first saw our first amount of significant selling following that real start of the bull run in 2021. Prices now have pulled back to that same level. This is the same level where we bounced in summer of 2021 when we did experience that mini bear before we went on to mark all new time highs. And just for the sake of basic support and resistance, I mean, this is going to be the likely area for us to push up. You know, I really recommend that for traders here, don't really get too far into reading the tea leaves here. We need to understand a couple of things. One, we are in a downtrend. All right, we can see that the dominant direction of the market is to the downside. Therefore, we should be maximizing our bets on downside potential. All right. When history has shown us, okay, that Bitcoin doesn't really V-bottom out of a bear market. Okay, this wasn't a bear market, but with the exception of this V-bottom bounce, typically V-bottom bounces are going to occur when the dominant trend is already present. Okay, so the narrative has definitely shifted. The narrative in cryptocurrency has shifted. We are certainly no longer in a euphoric market, and we've started to see all these aspects, all these signs, all these confirming signs of bear markets, i.e., lower capitalization projects that were not able to fund themselves very well, for example, or sell into stablecoins, sell their native token into stablecoins during the bull run, are now doing so. And unfortunately, that is going to tank the native token, piss off the community, and pretty much destroy the project. That is starting to happen. Obviously, NFT sales have plummeted. Volumes down like 80% in NFT sales. Obviously, prices are down anywhere from 60 to 80% pretty much across the board, with the exception of BTC and Ethereum, and just all these things that come along with all these things that can confirm that we have certainly shifted from one dominant market direction into another. So the narrative has shifted, so we can confirm that things are bearish. So what's the likelihood that we're going to V-bottom out of this? It's unlikely, right? If you guys study Wyckoff analysis, likely what's going to happen is we're going to have a climax of selling at some point in time, or in options terms, a market puke, which is a fantastic opportunity for those with capital on the sidelines. I've been tweeting about this a lot on Twitter. Where else would you tweet? So the likelihood that we're going to V-bottom out of this maneuver is unlikely. Now, I do expect that we're going to experience a rally, but when we're looking for when to modify our portfolio, and I've talked about this before, from USDT to BTC and Ethereum, I think that's the first logical step. You want to be in stable coins, I think, as the market is moving down. And there's lots of opportunities shorting the market, options calls with puts. All of these things are strategies to make good money in a bear market. Of course, us trading the PTP methodology, utilizing the daily time frame, we're just simply waiting for our system to activate and tell us when to take these shorts. And of course, we've been biased to the short side because everything is underneath the daily baseline. That's how we trade. So I say all this to say, I don't want people to get really levered up and take a lot of excessive risk playing these relief bounces. Yes, I do think that Bitcoin's price is going to move up over the next month or so. And what will be really interesting is to see how the market responds overall through the month of June. Now, this Friday, we have CPI coming out, which is pretty much the industry standard for looking at how inflation is affecting commodity prices. So a very key metric, most individuals I know are positioning themselves to the bearish side. The reason why is obviously the non-farm job numbers just came out last week. And unemployment was not going down despite 320,000 some jobs being added to the labor force, which was quite a good number. But unemployment was not going down. So obviously everyone is expecting that the CPI numbers are going to be quite horrendous and that the market is going to take a turn to the downside because of that. Also note that in June, we are going to be experiencing another 50 basis point rise in the federal funds rate, the effective interest rate of the United States dollar, which is one of our bellwethers on how well the economy is doing. So all of this negativity in the air, most individuals are positioning themselves to the downside. And not to say that you can't keep, if you're holding long-term hedges, absolutely you can hold on to those, right? I don't think that we're V-bottoming out of this area of the market right now. I think what's likely going to happen is that we're going to experience a bounce here just due to all the technical factors we can see on the screen. We are at historical support and resistance. We are at a period of extreme oversold territory. We're experiencing, I think, a short-term selling climax. One other key factor in this, of course, is if we look at this large candle right here with this large wick to the downside, high volume spike. When do we know? When do bottoms form? When do tops and bottoms form in markets? When there is a large amount of volume, generally a wick accompanies this if we're analyzing price action. We see all those things right here. All right, so we can see that after that massive sell-off, we can see that the selling pressure subsided and died down, and now volume has begun to switch back to the backside. Now, support and resistance trendline traders, which I am not one of, might look at this and say, well, okay, price might bounce up and then reject from that trend line. That would be quite bearish. If we start trading below, I would say this low right here, then we can pretty much dismiss the hypothesis of this video. That we're going to be experiencing a more significant bounce. Not to say that we're necessarily going to drop down after that. Of course, the market can just consolidate here before moving lower or again, perhaps reversing higher. But when we're looking for movements like this kind of relief rally, those do tend to happen in a V-bottom sort of fashion, right? So we can see a little bit of sell-off here and then a push price and then price pushing back up. So that's essentially what we're looking for here with Bitcoin. So just taking a look at some of our other indicators here, of course, we can see that not only have we experienced multiple weeks of downside and now starting to see a little bit of green. Again, Minx being oversold. Minx, our momentum oscillator. The last time also, I just wanted to point out this fantastic short signal that Minx signaled for us. And of course, Parallax here, our confirmer, does agree. So this would have been the last short trade that our proprietary indicators recommended. So beautiful catching that maneuver right here. And right here on the previous weekly candle was our take profit short signal. So boom, right there, we should be out of that short position and potentially looking at this as a reversal long buy. We can also see Parallax dipped into the oversold territory and then recovered. And Parallax has been absolutely fantastic at catching tops and bottoms and letting us know when the trend has shifted. Parallax, as we can see, did shift into the red all the way back here at the very beginning of the sell-off and has maintained that all the way throughout. So a beautiful trade right there. So key takeaways here on the weekly chart of Bitcoin. I believe that we are heavily oversold. I do think that we've reached an area of the market where we can expect to see a little bit of a sentiment shift and a move back up to the upside. Now, where might we be heading, you might ask? Well, let's go back to the charts and utilize another tool in our tool arsenal, the baseline, to determine where has Bitcoin reversed previously in the last rally that we experienced in the small bear market. So let's go back to the charts and we're going to apply our baseline here. Now, I want to point out that as we can see in this last bear cycle, or in this current bear cycle, Bitcoin bounced, and where did it find resistance? Right at the 60 Hall moving average, which is what we use as our weekly baseline here. All right. And so we can see right here that Bitcoin is about to cross up above the qualifier line and start heading toward that baseline. I think that makes a very logical target. So that number's right around 37,000. Below 37,000 is 37,002, 37,003. So I think these are going to be very reasonable areas when we're looking for where this bounce might occur. And now we can pause when we get here and see what kind of rejection, if any rejection we get, and look to either move back into a short, potentially wait and re-add for continuation to the upside in the case that we are going to experience a little bit more powerful rally. Although I would be a little suspicious the farther and farther up above here we get. Again, we typically don't V-bottom out of a bear market, or adding to currently existing shorts if we've been positioning in a weekly fashion since here, as we should have been. So traders can look to add to an existing short here while taking profits on their longs. Traders can look to open up a new short once they see signs of rejection. Traders can simply book profits on their longs, move into stable coins, and wait for the dip if they're uncomfortable trading the market to the short side. Multiple options here, a lot of ways to make money. So bounce time for BTC might be imminent, and that's a way that you can potentially trade it. Now let's go look at Ethereum USD real quick to see if Ethereum is going to hold up and show the same signs of strength that Bitcoin is. And the answer is yes. Yes. So if we look at Ethereum quite closely here, we can see more of the same. All right. So again, we have this shelf that we established on the run up. This is May of 2021. This is May, a low. This is June 21. This is July 21. So this is essentially that market sell off. And you'll see that it corresponds essentially with the shelf that we formed February and March of 2021. So we're right back down in that support area again. Okay. We have literally touched that area. Okay. We touched the lows. We saw buying come in. We have that same sell-off candle, that selling climax candle. We can see selling slow down. We can see volume slow down. And now we can see price start to climb back up. And flipping that baseline on again gives us a very logical target, and actually more attractive target than Bitcoin. So Ethereum might be poised here for more growth moving into the merge. As we can see with Ethereum, we might be looking at a 45% rally. If Ethereum goes back up to the territory of the baseline, rejects from there, and then potentially heads lower. So when we're talking about the Ethereum trade here, I think we can take less risk because there's more reward. Obviously, and the reason I say that is because Bitcoin is always a safer trade. Ethereum is a more volatile asset. As blue chip as it is, it's still not Bitcoin. And in these market conditions, you want to be playing the most secure and safest trades that you possibly can and managing your capital very tightly, because it is in bear markets when people tend to make the worst mistakes. Bear markets can turn people into wealthy individuals if they play their cards right. Bear markets can also completely destroy you and make you lose all your capital. So you have to play these correctly. So because we're looking at more potential movement here in Ethereum, we don't need to take as large a position sizes. All right. And remember, what is the macro here? What's the meta for these trades that we're taking? We're taking counter trend trades potentially here against the dominant market trend, right? So even though we're in an area of exhaustion and potential reversal here, we're also in an area where we're also overall in the bear market. So we want to be careful with taking our longs and less cautious with taking our shorts, because short bets are more likely to play off in a bearish market. So as we can see, Ethereum is looking quite like Bitcoin in the fact that it is oversold. It is at historical support, and it is showing a little bit of sign of life in the form of some positive price action. So let's keep our eye closely on it. And I think we can take these trades in companionship, Bitcoin and Ethereum to the upside. I think these are going to be some nice, easy leverage trades to take up to previous resistance, up to the resistance of our weekly baseline, and then look for those opportunities there. Now let's go down to the daily time frame to see if we can get any kind of confirmation from our regular PTP system for these trade setups. And here we are on the daily chart of Bitcoin. And as we can see, after being in quite a pronounced bearish daily trend with a little bit of a fake out right here, we find ourselves finally breaching the positive side of the baseline, which means as far as the daily goes, we can confidently be looking for longs. And we might be on the verge of what I like to call a BDB, a big daily breakout. As you can see, price has moved sideways and a little bit of accumulation. We've had some signs of strength right here, pull back, held support, did not trade a lower low, and now we have another push up. So we're looking for a breakout of this range and a movement to that weekly target of 37, as we talked about before. Now over here, we can see all of our indicators beginning to line up. I do have Minx right here, we can see that it signaled for a long over here, but not on the same candle as Parallax. Parallax did not flip positive until afterwards. And here's a nice little caveat for these systems, for Minx and Parallax perhaps in particular. I usually dismiss the first signal after a strong trend and sideways accumulation because it is generally a fake out. Again, we do not V-bottom out of these things, okay? But we've not V-bottom, we're not V-bottoming now. We've moved sideways in accumulation. We've had our first sign of strength, a pullback, and a holding of the range. We did not trade any lower than our accumulation range, a sign of strength for the Bulaws, and positive things might be coming. Again, a nice price action break out of these things would be good to see. But here we have another long signal in combination with our Parallax flipping bullish. So our indicators are letting us know that we can look to take this long. We're also above the baseline. So for PTP traders, we just slap on Quadriga and we've got some nice metrics. Actually, the daily is going to be nice in concordance with the weekly trade right here. Our third TP is going to be $36,060. So right there, we are looking at essentially a slightly lower price target than we were looking at on the weekly time frame. So the daily is confirming that nicely. Stop loss down around that 29,261. So we do need this shelf to hold for this trade to be successful. Pullbacks right here and continued reaccumulation. We're going to be having a losing trade, and then we're going to be looking for a secondary opportunity. Again, breakdowns here of 27,000 are going to be reshorting and taking momentum shorts. Again, just hopping back into the trend in the case that this is all wrong. Yeah, any positive price action here is just going to continue to further confirm our analysis and our ideas here. So looking over at FUSD, what do we have there? FUSD, again, more of the same, taking Quadriga off briefly. We have crossed over the baseline. We've had our first long signal right here, but Parallax did not confirm. So Parallax is not confirming here for Ethereum. So we do need to be a little bit more patient for Ethereum, and that's fine. Again, Ethereum has farther up to move than Bitcoin. Bitcoin's already showing a little bit more sign of strength. And I want to talk about that too. So let's hop over to there. So we've always seen this behavior in bear markets, okay? The most secure asset to currently have your funds in is stablecoins, followed by Bitcoin. Bitcoin is the safest place to hold your assets. And again, individuals might even say that Bitcoin is more secure than the stablecoins. And from an algorithmic standpoint, of course it is, right? With Bitcoin, your keys are your coins. Nobody can steal your funds. With USDC, even though it is the gold standard of stablecoins, of course, holding your funds in USDC essentially opens you up to Circle's involvement, right? Circle is a privately traded company and they can freeze your funds. So, not your keys, not your coins. Now, of course, I have a heavy allocation in stablecoins. You need dry powder to be able to purchase more assets in a bear market. But Bitcoin, of course, is the most secure asset to be holding. Now, in previous bear cycles, we have always seen the Ethereum Bitcoin ratio, all right? So the price of Ethereum in Bitcoin trade lower even after Bitcoin bottomed, okay? So what I mean to say is that in December of 2018, Bitcoin bottomed, okay? In December of 2018, Ethereum bottomed against USD. It wasn't until March of 2018 that ETH BTC bottomed, okay? So Bitcoin is going to perform better coming out of the bear market than any other asset. And other altcoins are not going to perform as consistently better than Bitcoin until Bitcoin shows signs of strength. And that will allow new narratives to begin growing strength as well. Okay. So there's no bull market until Bitcoin recovers. There's no bull market for other altcoins until Bitcoin shows signs of strength. So while of course I recommend dollar cost averaging into the tokens or the assets that you want to hold for the next bull cycle, if you want to be more conservative, just be patient and wait until Bitcoin has shown signs of strength, okay? When we've accumulated, when we've bottomed, and when we're beginning to move back up, that is one of the best times to begin unallocating from stablecoins and begin moving heavier into allocations of more volatile assets, right? Your growth chips, your meme coins, whatever you like. Those are going to have fantastic potentials for growth and opportunity. And at the same time, this allows you to not be bag holding these all the way down, because these markets that we utilize, they're not cyclical, right? They are reactionary, okay? Humans drive the markets. The markets are not perfect. The markets are nowhere near perfect. The markets are not efficient. Euphoria can drive prices higher than you could possibly imagine, and depression can drive prices lower than you could possibly imagine. So the bear market can get much, much worse, and bull markets can get much, much better. Okay, now I'd like to share with you a trade that I just took today. It was a day trade on BTC USDT on Bybit, and I want to run you through the trade. and what my reasoning and my rationale was, the indicators that I utilized to take the trade, and how much P&L I made and how much I utilized to take the position. So with that being said, let's move over to CoinGlass so I can show you how I took this trade. Okay, so this is the 1 minute chart of BTC USDT. And one of the things I really like to watch out for on the 1 minute chart is for sharp drops in open interest. So I'm on CoinGlass, coinglass.com. This is a free website to utilize. And on CoinGlass, you can look at open interest decline, Bybit BTC USDT. I also have funding rate, and we'll just stick me here. How's that? We'll just stick me here. Hopefully that's good. Okay, so we have open interest decline, Bybit BTC USDT, and funding rates, Bybit BTC USDT. And when we see a sharp drop in open interest, it lets us know that lots of positions have just been closed. And there's only really two ways that happens. Either a lot of people just got liquidated, or a large order or large traders just closed their position out manually. Their take profit orders got hit, but essentially there is less activity in the markets now. Okay. And when you see something quick, sharp, and sudden, it is usually a good indication that the market is going to, albeit sometimes momentarily, move in the opposite direction. And we can see that happen right here. We can, okay, so right here, this is the range that I was looking at when I was first beginning my day. And I was originally going to be looking, I didn't get to the desk in time to catch this maneuver. Again, you guys can see this sharp drop in open interest. All these wicks to the downside combined with this large volume spike. Again, all very telltale signs of a reversal. So a great opportunity for a long there. But I was actually looking for a breakout long trade out of this area. Okay, I was looking for a breakout long trade, which of course was eventually a good trade, but this is not how I took the trade. So I was actually positioning myself for a long. I was looking for this breakout trade, and then I watched price started running up, and I started thinking, okay, well maybe I'm too late for this trade. I probably missed my opportunity, and then this candle occurs right here. All right, so inverted hammer candle, long wick to the upside, and a sharp drop in open interest right here. And at this point, I immediately switched my thoughts. I immediately was like, okay, no, I do not want to take this to the upside. We've just had a sharp drop in open interest, plus this nice liquidation scam wick. A lot of traders just got liquidated who were trying to go short, and now the market is likely going to move down. So I entered my position right in here. It was I utilized $2,000 in margin, and I used 10x leverage. So it was a $20,000 position. Now, as for where my stop loss was placed, again, you don't want to use highs and lows. So I did set my stop loss here, and then I used a 30-minute ATR variance. So my stop loss was actually right around 31,638. That's where I had my stop loss set for this particular trade. And I had originally targeted for my take profit level to be slightly below this level. I was looking for a sweep of the lows, but that's not what happened. We do see that I was right immediately. Price immediately went down. Did not take my profits here. Price immediately moved down. Price bounced back up. I saw that it was unable to make a higher high. I felt quite good about that. And then price just drifted lower and lower and lower, but we weren't ever actually able to meet my stop loss. Okay. And around this time, I wanted to free up capital to trade a couple of other trades. So I ended up closing my position right about here, okay, for about a $200 gain. And again, nice, easy work over the course of a day. Took $2,000 to make $200. Not bad wage for a day, a couple hours of work. And I'm very happy with that. When we're looking for nice, consistent, slow gains, that's what I'm doing in this bear market. I am utilizing a 30-minute volatility system. I am using my weekly system to pick up larger positions, and I'm utilizing my daily system for my regular trades. And I'm also experimenting with these lower time frame strategies, which I say experiment with. I've been doing them for years, but and these are all strategies and methods that you guys and girls can use at home to improve your trading. And I just wanted you to see an opportunity and an example of how I look at the markets and how you can use open interest and price action to actually pick out better day trades for yourself. So that was our quick market update. Let me know in the comments down below what you guys think of the analysis and what you guys are doing as traders to improve yourself in this bear market. If you guys enjoyed this content, make sure to subscribe so you never miss an update on the cryptocurrency markets and so that you can learn to trade better. If you guys enjoyed the video, make sure to leave a like and a comment. It really does help us in the YouTube algorithm. And if you guys are new to trading or you're an experienced trader wanting to up your game, if you'd like to understand how to utilize statistics to put the edge in your favor, then definitely recommend checking out our Discord. Link is in the description down below. And if you'd really like to improve your game, you can And if you'd really like to improve your game, you can join our premium trading group where you get access to all of our proprietary indicators, our trade signals, our market analysis, as well as access to our online learning academy where you can learn to build your own trading system from the ground up with zero experience or a lot of experience. It's built for everybody. If you guys would like to trade on the exchange we trade at, where you can get access to futures markets, spot markets, and options markets on cryptocurrency with low fees and deep books, highly recommend checking out Bybit. Link is in the description down below, or you can visit bybit.crackingcryptocurrency.com. Until next time, guys, trade safely.